we're looking at regular trading hours, the difference between where we settled previous day and then where we open up at 9:30. That's what this is highlighting here. The benefit of having that information, it gives us the opening range gap. Now, I'm going to have very specific lectures on how I'm going to use the opening range gap. What sets up conditions to where it makes me interested in a trade, whether bullish or bearish. That's not going to be covered in this video, but it will be its own individual video. I'm going to talk about the opening range, which is the first 30 minutes of trading. Then I'm going to teach you the first 60 minutes dealing range. Totally different. And how to use that and what that means and how it can help you understand the power 3 or the characteristics of a daily range. How I'm going to employ that. Consistently going back in looking for the same things all the time. If those rules are not met, I'm not trading on that basis then. I have to sit still. That's why we have a model. That's why we have to flesh out some kind of trading plan that we're going to stick to and adhere to. And that way we will have measurable progress. If we stick to rules that are based on sound logic, then it goes without saying that it's reasonable to anticipate progress that's profitable. By having regular trading hours, it benefits us by knowing where, if there is a opening range gap, and by knowing where we settled the previous day, that's the benefit in it. So I want you to see that for today. We had market trade higher here, and we had this large gap that has traded since 9:30 this morning. So that opening price there and the settlement price there, that difference is the opening range gap. Now I'm going to show you also by dropping into a 1-minute chart. We're going to scrub back here. And you want to do your measurements on the opening range gap with the 1-minute chart in regular trading hours. So having the open and close on this here is the same price essentially. And this is the beginning points of making money with smart money concepts. You have to have a frame of reference. You have to know where do you start? Well, if you're day trading and you're trading index futures, this is where you start. Is there a gap? We can see that the market opens up at 9:30. We now have what is described by me as the opening range gap. It's the regular trading hours difference between today's opening and previous day's regular trading hours close. That's all it's doing. Now, when we do that, if the gap is larger than say 20 handles, you can start running your fib across it, and I'll let you see my settings because I know I get asked that a lot. I'll untoggle this for now. These are the settings. So this is the lower quadrant, upper quadrant, midway point, or consequent encouragement. And then you can highlight 0 and 1, which is going to give you basically the same levels that I've already highlighted here with those black lines. So it would look like that. Okay. So we have a premium gap opening, and I'm not interested in trading long on that when it's such a large gap opening like that. So I'm going to let it trade higher. I want to see where it could likely trade to. Okay, remember we have to know how price is likely to deliver and by time. And we know it's non-farm payroll week. So we want to be trading on Monday. But we have a large gap like this. We have a tendency to do what? Keep going in the direction of the gap. But eventually in the afternoon, between 10 o'clock and 11 o'clock, we could see a change or a shift in market structure as we enter into that lunch hour. And then we could anticipate a move back into that gap, being the separation between previous day settlement and the opening price. So the upper quadrant, that's a very important level. I think that that is a high probability draw on liquidity if the market eventually can show me that it wants to trade lower. So by knowing where the market may likely draw to before it can reverse and trade lower, those are important factors in what it is I'm trying to ascertain in price action. So I sit on my hands. I'm not interested in trading this long. But I'm also not trying to pick the top either. I want to see how the market can produce a turn lower. I don't need to pick the top in that. And I want to see the market provide a time-based delivery, that's a macro,